In the world of finance, where uncertainties abound, one thing stands firm today. The current 5% interest rates are not abnormally high. In fact, renowned market analyst Jim Bianco argues that we may soon view these rates as rather low. Why? Persistent inflationary pressures, partly fueled by tariffs, make it politically untenable for the Federal Reserve to prioritize rate cuts over price stability. Remember, inflation disproportionately harms lower-income households, making it a significant concern. Let's delve deeper into the impact of tariffs and deficits. The Trump administration views tariffs as a tool to reshore industries, but these tariffs risk inflating consumer prices. Despite some costs being absorbed by corporations or offset by shifting trade patterns, early data, like that from Truflation, already shows price increases. Add in the soaring US deficits, projected to exceed $2.5 trillion annually, and we face the prospect of rising bond yields as markets demand higher premiums to finance government debt. This could push yields beyond the 5% mark, making our current levels seem like a fond memory. Now consider the dynamics of the market and the role of retail investors. Empowered by low-cost ETFs and social media, retail investors now dominate equity markets, particularly in speculative trades such as meme stocks and zero DTE options. But with power comes responsibility, and Bianco warns that this trend could amplify market volatility. He also highlights a transition from passive to active investing, as bonds and cash offer competitive returns of 4 to 5% with lower risk. Turning our attention to investment strategies, Bianco advises tempering expectations. Equities may deliver a modest 6% annual return with a higher level of volatility. He recommends diversification into bonds, like actively managed ETFs such as WTBN, and cash for stability, especially for retirees. And while the market has shown resilience in the past, such as the rapid post-2020 recovery, Bianco stresses that bear markets can be long-lasting, as seen in the 13 years post-2000. We also need to consider the broader structural economic shifts. The global landscape is reorienting away from globalization, with tariffs and fiscal policies reshaping trade and labor markets. While protecting domestic industries has its rationale, Bianco questions the efficacy of tariffs. Instead, he advocates for systemic solutions to address deficits and wage stagnation. To sum up, Bianco's outlook underscores the need for managing expectations. Higher rates and inflation are likely to persist, necessitating a balanced portfolio approach. The influence of retail investors and fiscal pressures will drive volatility, favoring active management and caution in equity exposure. The era of easy money has ended, requiring strategic adjustments to navigate a complex macroeconomic landscape. So as we move forward, let's remember to plan strategically, invest wisely, and always stay informed.